Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, checking back in on Canadian MJ, adding a few more tickers here. In every video I do, I get about 3 more additional tickers people want me to cover, and obviously not able to do all of them. So CGC, MT, ACB, APH, OGI, EMC, CMED, and MJN to wrap it up. So there's definitely differences occurring between the strength of a bunch of these names. CGC was the leader. It is no longer the leader. We have other names that are breaking out more bullish, much more significantly than CGC is, and we'll look at that for a reason. Or we'll look at the reasons behind that, I should say. So for CGC here, we see a tightening range where I'm looking at support of 965 and resistance of 1009. We can see we had the bull break. We consolidated. 965 is the low of that consolidation. And then we had a lower high on the bounce attempt at 1009. So it's a very clear tightening range. The middle Bollinger Band on the daily continues to hold. Every single day that's touched that level, 3 of the last 4 days, has held that support. And one thing the bulls do like is the decreasing bear volume on these pullback days, but we are still right at that middle Bollinger Band. If we close below it, it's a bit of a red flag because then we're looking at 965 and then 895. We're on the verge of a bullish MACD cross. We keep rejecting from $10 psychological resistance. We need to see the bulls turn $10 into support and then maintain it on the back test. So we closed above $10 here January 4th. Could not hold it on the back test. We lost that support, and now it's back as resistance. You can see the Bollinger Bands are getting tighter. So the sector leader here, if I had to guess, again, the ideal way to do things, in my opinion, is fundamental mixed with technical in terms of analysis. So I would look at this chart and compare it to everybody else and say, okay, a lot of these other names, the big players, ACB, APH, they're all making clearly more bullish breaks than CGC. Why is CGC lagging? If I had to choose, it's probably being held back by the pending deal with MT. That's a reason that I would come up with. So looking at CGC on the weekly, bullish week last week, not much follow through at all this week. We are still maintaining exponential supports. We're certainly still very bullish on the weekly. We need to be aware of this potential bearish MACD cross. But as long as we keep maintaining higher lows, bulls are in control on the weekly. And in terms of the weekly trend, 851 is the key support to be maintaining bullish movement here on the weekly time frame. Obviously, the bulls don't want to give back 10-15% down to that level, but that is the level that I would be looking at. A break of 851 would have me questioning the strength of the bulls on this weekly longer term time frame. So MT, very similar to CGC, where we've got our high, our low of consolidation at 660, lower high at 689, closed down near the low of the day today. We're well above the middle Bollinger Band. We haven't even tested it the past 4 days. Also on the verge of a bullish MACD cross. And we're going to see with this deal if it gets worked out or not. And then we'll see if maybe the bulls will play a little bit of a laggard game and catch up to some of these other names. Weekly time frame for MT also still very bullish, holding exponential support, and certainly still in an uptrend after consolidation, normal and healthy following the breakout on low volume. Bulls are looking fine on pretty much every Canadian MJ weekly chart after the bull breakouts that we've seen. So ACB, disclaimer, I have exited about 40-45% of my position today in ACBFF, just locked in profit at 195. Really nice gains in a short amount of time, so I'm going to lock half of those in. And that was because ACB rejected from key resistance 264, and we saw a bearish reversal candlestick form today. Bulls are still absolutely in control of the trend. This was more of just me wanting to lock in some of that profit, wanting to start the year off with a nice gain in Canadian MJ, and just wanting to have half of my position, because now if it keeps going up, I'm fine because I still have more than half of my position making money. And if we consolidate, I then have money available to re-enter a position or also scout other plays. And I was scouting EMC today in the low $4 range. We'll get to that in just a moment. But we're rejecting from the upper Bollinger Band resistance. The upper Bollinger Band is ascending. It's creating room every day to the upside, but the price kind of outran that upper Bollinger Band, and without significant volume to break out and close above it, that's where we are rejecting from. And unfortunately for the bulls, it's right at that 264 resistance. So a lower high by 2 cents, still in this longer term lower high pattern until 264 breaks. And I say unfortunate for the bulls just because this makes them a little bit more worried. You got to think about psychology and what's going on here. And that resistance of 264, if it had broken today, bulls would have really breathed a sigh of relief and know that they were in control of this trend. Now we have the, okay, well, what if we can't break 264? What if we're going to consolidate back down to 230? Previous resistance, now support. That break of 230 was when I initiated my bullish position because of that clear resistance break on an increase in bull volume. So if I were to re-enter, the things that I would be looking for are decreasing bear volume, and I would be looking for an entry at 230 ideally. But if we don't pull back that far, I actually don't want to pull back that far because I would exit my other half of my position before that. I would like to see the low of yesterday hold 244. If we see another red day tomorrow on decreasing bear volume and 244 still holds, I'm going to still ride my other half of a position. And we've got the 50-day moving average support here, 238. That's slowly ascending as well. That's going to likely be at 239 tomorrow. So I'm watching 244 and 239 as supports. 239 was the low of Thursday. And we'll see, again, as long as we don't see increasing bear volume, bulls are fine with these red days of consolidation. As you can see, Friday we had a consolidation day on really low volume, and then the bulls showed up in a big way on Monday. Weekly time frame, same story. Bullish inside candlestick break. We can see inside tighter and tighter, and then a clear bull break, and now we're getting that continuation. Just need to break over that 264 to be looking back up to the upper $2 range towards $3 psychological resistance. APH bulls are in the lead right now, without a doubt. And that is because, when I say in the lead, I'm referring to, there's two groupings in my mind of stocks, the big boys and then the little boys. And the big boys are all these names that I'm going to cover first. And then we have the recent IPOs. And then we have the little guys, MJN, EMH, MGW, all those names. So APH is now the leader. Look at this resistance, 556, we broke it. So that would be equivalent to ACB breaking 264, which obviously has not occurred yet. So ACB rejects from the upper Bollinger Band, while APH breaks resistance. Nice spike in bull volume, and we closed up near the high of the day above the upper Bollinger Band of 568. We are now in breakout mode. We've got resistance at 575 and 588. APH is clearly establishing itself as the lead bull, technically speaking, on these charts on the daily chart. So as long as the bulls continue to close above the upper Bollinger Band, they will be really strong. You can see the closes the last 3 days right at the high of the day, leading to continuation. Higher lows has been the pattern now for just 3 days in a row, but clearly lots of strength. Weekly time frame for APH, you can see that double bottom down at 406 and 405. Bulls showing up in a big way. We've got our sights set on the highs from that breakout in November. So everybody else can only hope to follow what APH is doing and break out and see all this strength, because lots of gains to be had there. Let's see here. Just 6 days ago, we were down at 501, the low of the day. Here we are at 572. So significant gains to the upside. 35%. Nope, that's not right. So let's see. 14% gain in 6 days. Certainly a nice gain the bulls are not complaining about to start the year. OGI had the bearish news. It is still clearly struggling. Lower highs is the pattern. We're rejecting from these exponential resistances. Even the close at the high of the day yesterday, we then had a gap down open, which is odd, but certainly weakness compared to everybody else. We do have a base of support down here at 253, 251, but if the bulls don't break this lower high pattern, if OGI were on par with APH, we would have broken 353 today. So that shows you just how significantly more bearish we are, and that's because that's the high of December 14th. And that's what I'm referring to when I look at ACB 264 and APH of 556. So OGI, the clear laggard here, and that's due to the bearish news. Lower highs is still the pattern. Bulls need to break 285. It's a little double top the past couple days, and then up to 294 after that. So a lot of work to do for the OGI bulls to catch up to everybody else. Clearly the weakest out of the big boys, and the weekly time frame shows that. Bearish MACD cross already occurred. Bearish TCG cross of this 4-period exponential crossing the 8-period to the downside. Bulls must hold this middle Bollinger Band of 260, and it is still, on the whole, it is still normal healthy consolidation when you look back to where we came from. Every period of consolidation has led to higher highs. This is a little bit more drawn out than all the rest, but as long as we form a higher low compared to 232, the longer term uptrend is still intact. EMC recent IPO, we got the blue sky breakout to start the year, which is an ideal scenario for the bulls. Breaking 398 was your buy signal, and we very quickly ran up to 446 that day. Big moves to the upside. So we had EMC on one of our top watches for 2017 because of its positioning due to its all-time high, lack of previous price resistance, and now we're looking good. I'm looking at entries in the low $4 range. We hit 405 today, and why I like entries in the low $4 range is because the clear stop loss level, we had a double bottom at 408, a double low I should say, but the clear level I'm watching is previous all-time high resistance, now support of 398, and that $4 psychological levels right there as well. But what I like about this play is we can make an entry in the low $4 range, set our stop loss just below 398. So let's say if you had an entry at 406 today, obviously that would have been great timing, but anywhere in the low $4 range, and you're not going to be risking more than 10 cents on this move. You could be entering $1,000 or 1,000 share position and risking less than $100 if you're making an entry in the low $4 range and you put your stop loss at 397 or 396 just below that support. Clearly the bulls are buying the dips in the low $4 range at this point. We closed at the high of the day, and we're just on the verge of another blue sky breakout. We've got resistance at 445 and 446, a little double top. If we break 446, we're looking at 450 psychological, and then the sky's the limit. Blue sky breakout, it'll go as high as the bulls take it. So it's clearly an uptrend. Nice strong move. And as long as 398 holds, I do like bullish entries in the low $4 range, but we might not get another shot at that entry because the bulls close at the high of the day and we're heading up what appears to be in the 430s tomorrow. Weekly time frame, not much information. Breaking out above the upper Bollinger Band and lots of strength in this recent trading name. CMED is weak compared to where we opened on the IPO, and we have some clear support and resistance levels. The bulls are forming higher lows from where we bottomed out at 1028. The most recent support is the low of today, $11 psychological. 1099 was the low of Thursday, and resistance 1143. So every time we break the highest price we've seen besides the IPO day, we get a little bit of momentum to the upside, continuing the higher low and higher high pattern. I don't really like CMED at this point. I want to see a little bit more price history develop to get a clear sign for trends. If I were in at this point, I would know that $11 is a key support level, and if it breaks, 1078 is the next level to look to. So I would likely have my stop loss just below $11 psychological support. Weekly time frame, also nothing to see in terms of recent trading activity. And last we got MJN, very strong bull break, full-on breakout mode. And this was one of the first to make this breakout. As soon as we broke above 162, the lower high pattern on the daily had broken. So again, it's that high of December 14th, and because of the strong correlation in all these names, that high is a key resistance on everybody, pretty much always on December 14th. So the bull break here occurred January 4th. Let's see when that APH bull break occurred. Didn't occur until today. So none of these big boys have broken that December 14th high except for APH, and it just did it today, which is really a laggard to what the move on MJN has been doing. So that break occurred days ago, and look at the non-stop upside since then. Big time volume today, huge volume. It is a spinning top bearish reversal candlestick. What I would be looking for if I were a bull in MJN is after the amount of upside we've seen now 7 green days in a row, and we've come from low of 140 up to 190, so over a 35% gain in 7 days. So I would be looking to lock in profit if we lost this upper Bollinger Band support with a close below it on the daily time frame. You can see we formed higher lows 7 days in a row. So if we break the low of today, tomorrow, 182, that would be a sell signal for me. And again, if it looks like we're going to lose the upper Bollinger Band, that's a sell signal for me as well. And I would look to reload. I would look at support here. The low of this consolidation day was down at 168. So in terms of resistance, it's the high of today, 190, and then the high of the breakout in November, $2. Nobody else is anywhere near that close to breaking that high and continuing to higher highs. So MJN, very impressive. And you can see how much less dollar volume it takes to move this name. It's less than $2 million on the highest volume besides today. On Thursday, high volume day, less than $2 million traded. And you see CGC is still trading over $10 million traded a day. All these other names are trading $5 and $6 million. So $2 million in MJN, and this little laggard certainly now a lead bull. Weekly time frame, stair-stepping higher and looking great. Increasing bull volume. We saw a bullish reversal candlestick, an inside candlestick as soon as 150 broke. That was the bull signal on the weekly time frame, and it's been nothing but increasing bull volume, which is exactly what the bulls want to see. We still have 3 trading days this week. We're going to see a high volume week, higher than we've seen in the past 2 months. I should say the past 6 weeks at least. So, summary, APH is the lead of the big boys. ACB is second. And we've got CGC and MT kind of stalling out, looking like that deal might be slowing things down a little bit. OGI is the clear bear out of the big boys. EMC loving the potential for blue sky breakout continuation. And MJN, these little names, seeing big time gains to the upside over the past 2 weeks. I appreciate you watching. If you appreciate this video, feel free to like it and share it. Certainly appreciate that as well. Hope you have a great night. We'll see how the rest of the week goes.